There's a solid state battery design being discussed right now that completely changes the silver math. Not grams, not ounces. On the order of 1 kilogram of silver per electric vehicle battery. And once you scale that across global vehicle production, this isn't a battery story. It's a silver supply shock. Today is Saturday, December the 20th, 2025, and silver has closed the week yet again at a new all-time high, and they could not even smash it down on Friday like they have done for several weeks now. And that new all-time high is
6.7.
Yes, above $67 an ounce on the week. I want to spend the first couple of minutes here today recapping some of the central themes discussed over the last few videos, and then we will deep dive into the specifics, or at least the insight we have into the specifics on Samsung's solid state battery. We have the perfect storm now in the silver market, where for many years now, silver has been at a deficit where demand has outpaced supply. That's been driven predominantly by industrial demand. Yes, there was a pickup in investment demand around COVID in 2020 into 2021, but then with the correction and then the flatness in price for several years, the silver investment demand subsided, but the industrial demand has remained in place. And then basically, because of these sustained deficits over many years, there's been no inventory buffer. And now what has happened? The newest demand, the investment demand, is starting to ramp up now. And that's the perfect storm. And that's why we are seeing breakout into new all-time highs. And it seemingly looks vertical. And you have people who don't know what's going on, who don't understand the market, who just simply look at a chart and say, oh my God, the RSI indicators showing it's overbought, it needs to correct. From the investment side of things, I do see two themes in 2026, with one of them having its greatest impact at the very beginning of the year. You're probably going to have a group of investors that have made gains, substantial gains in silver and metals and miners in 2025, and they've been looking to defer the tax gains and sell at the beginning of 2026. Not sure how much of an impact that's going to have, but I mean, it is in the probability space. But the number one theme is going to be what I've called the wealth effect. Your financial channels like Bloomberg, CNBC, they're going to talk about what's been the best performance of 2025. That draws people's attention. They start hearing of folks that made money in those sectors, and they start talking to their financial advisors and saying, hey, do I have exposure in gold, silver, and the miners? And their advisors likely going to say, not very much or none at all, at which point they'll be inclined to say, okay, let's get some of my investment funds into those classes, and that's going to drive continued sustained investment demand. And now with this perfect storm is silver demand from the industrial side is about to explode even higher. We now have this impending demand from solid state batteries for electric cars, and these are designs that, from what I've gathered from research on the internet, they're calling for materially higher silver usage. This is just going to drive prices higher because this is colliding with a market that's already at a deficit from the current industrial use, investment demand that showed up, and now we have a seemingly vertical price change, a breakout to new all-time highs. As I highlighted in a video last week, Samsung is securing silver at the source. That source is Mexico. Mexico right now is the country with the greatest silver production. Samsung partnered with a miner called SilverStorm, who actually First Majestic, ticker AG, has a 20% stake in that company. And they partnered with them, providing financial backing to reopen a Mexican silver mine. And that essentially renders the production being allocated all to them. So supply right now matters more than the spot price. Let's talk about the math at a global scale. So the tech analyst commentary had suggested, Samsung's solid state battery design is reported to use silver-based anodes. And so some of the analysts are estimating that this could scale to hundreds of grams of silver or more per EV solid state battery pack. Samsung hasn't disclosed or confirmed this type of information, but I don't think they're ever inclined to disclose it because, I mean, this is proprietary information. You wouldn't want anyone to reverse engineer anything and provide very precise, exact specs. So, at the very highest end, let's talk about the math. In the world globally, 90 million vehicles are produced annually. And if you imagine 1 kilogram of silver per solid state battery, we're talking about 2.9 billion troy ounces at full scale. How does this compare to the last secular peak? We're going to anchor ourselves to the numbers of 1980. So it's widely known that the Hunt brothers controlled or had exposure to about 100 million ounces of physical. No, I do want to comment on this. A lot of people say, this is an outlier. These are people that tried to corner the market. But that's the story the winners in history tell you. History is written by the winners. Losers don't get to tell their story. But if you deep dive this, the Hunt brothers were not acting alone. They actually went around for a while talking to big investment firms globally. And there is a lot of literature out there where the Arabs, a lot of Arab investors, were heavily invested in silver as well. So it wasn't just them, but it's a great story, a cover story on the cover page to say, it was the Hunt brothers. But physical amounts they controlled about 100 million ounces. In paper ounces, from what the research suggests, they controlled about another 100 million ounces, but in paper and futures. And that scale of control produced a historic silver spike. Huge. And that math with the battery, that's 30 times larger. This is structurally different. This is not speculative silver that can be sold back into the market through a margin call, like what happened with the Hunt brothers. And just to elaborate on the history, it wasn't just the margin increases for silver that caused the sell-off, but the powers that be also went to where the banks that were funding them, because they were able to secure a lot of financing to continue on with their trade. But the powers that be went to the banks and told them cut off their funding. That was the real piece that caused them to have to sell out of their paper position and their physical position. But now with industrial demand, with these solid state batteries, this is industrial silver. It's embedded into the process. You cannot generate a margin call to get that silver back. It is permanently removed from the supply. You're probably thinking the math is not mathing. There's no way we're going to, at some point in the next 5 years, let's say, or the next 10 years, that we're going to produce 90 million solid state battery electric cars. It's just not going to happen. There's still people that are going to want combustible vehicles. And I've been thinking about this for a while, and I've been thinking specifically of how our economy has been slowly moving into a subscription-based licensing model. And what I mean by that, let's just say, just talking about cars, there's now these newer generation cars that are charging you money, the subscription type of service that, hey, upgrade and get this subscription, and then you can heat your seats and have remote start. And without that subscription, you cannot do that. As you can imagine with computers, Microsoft, for the longest time, you could go out, you purchase Microsoft Office, one-time purchase, you owned it, it was yours. But now they've moved to a software as a service model, which is just different nomenclature for the same thing. You now have to subscribe, and you either have to pay monthly or you have to pay monthly to subscribe to Microsoft Office. This trend had me put on my dystopian thinking cap. And ironically, I started reading all the famous dystopian novels back in 2008, back when I was seeing the great financial crisis, and I saw what they were doing with this massive money printing. And there's a quote here I have at the bottom of the screen which highlights this dystopian, what I see as becoming a reality. The quote is, "Welcome to 2030. I own nothing, have no privacy, and life has never been better." And so what I started imagining is they might push us into a world where hey, you don't own a car anymore. You subscribe to a car. And the interesting thing is, I was talking to Bully Cat about this. I call him Cat. Funny part is, I call him Cat like 90% of the time. 10% of the time, I probably call him by his real name, but Cat is one syllable. His name has more than one syllable. So I'm talking to Cat, and we're sending each other voice messages, and I'm talking to him about this. I'm like, I have a feeling they're just going to somehow push us into like, you're going to subscribe to a car. You're not going to own it anymore. He's the one that filled out the gap. He really said what could possibly happen is you get the insurance companies to be in cahoots with the government and these manufacturers. And this is what you do, because if you have to have an entire fleet of entire cities running on automated electronic cars that run on their own, you have to minimize the amount of people who are autonomous and driving on the road on a combustible or controlling the actual car. That's a problem. So if you collaborate, if the powers that be collaborate with the insurance companies, they suddenly say, oh, absolutely, this is America, land of the free. You can own your combustible vehicle, not a problem. But you do understand there's a higher risk. There's an inherent risk to you being on the road with all these automated vehicles. But absolutely, here's your quote, $50,000 for the year, and you can keep your combustible vehicle. And there's your perfect point into saying, hey, I can't afford this. I better get plugged into the grid and get one of these. And I could imagine them be like, and not to worry, sir, we can buy that combustible vehicle, take it off your hands, and give you 6 months free into this new subscription-based automated electronic vehicle service. As I mentioned earlier, you can't issue a margin call on silver that's in solid state batteries. And additionally, you cannot recycle it, at least not now. So it's not going to prevent this initial shock. Recycling is not possible. It's very uneconomic at the current prices. The machinery you need, the chemicals you need, it's much too expensive. But what happens if silver prices go up? What happens if we go up to 200 an ounce, 300 an ounce, or even higher? Now suddenly you're unlocking the ability to recovery. Suddenly becomes economical to buy the machinery and to scale up and the chemicals and begin recycling. And now recycling can better respond to the shortages, and this embedded silver in the batteries is not lost forever. Somewhat related to this, and this was completely independent thought, this was AG Stacking on Instagram. His name's Edgar. He's basically a dealer. He's no brick and mortar. It's all online. And just to give you an idea, just earlier today, he put up what looked like easily like 100 1985 Libertads. Those old Libertads, they go by the nickname of Gorditas, like the ones you're seeing on the screen here, these 1987s. But he had 1985s, and he was charging $72 each. As I mentioned in a prior video, APMEX is charging 77, 78, 79 for a random date. And very likely in the random date, you're not going to get a gordita, because APMEX is quoting for a gordita close to $100 right now. Anyway, what he was mentioning in his story is, you start having prices like $200 an ounce, $300 an ounce, you are now unlocking the ability of potentially enterprising folks going into landfills, perhaps war zones that have been hit with missiles. I don't know if many of you have watched that famous Asian AI channel who's been talking about silver. He did one on the missiles, and we're going off on a tangent, but it's interesting and it's related here. He's estimating that it was somewhere between like 5 ounces to 15 ounces to perhaps even a kilo for some of these sophisticated missiles. And now, if you have a market silver price that it makes it economical to recycle, you could now go recycle in war zones that have been blasted with missiles upon missiles. Yeah, it's all in small particles, but if the price is high enough, it makes it economical to scavenge and try to gather all those small particles, recycle it, and make it into usable silver. But at the current market price, it's not viable. But if we think ahead, if we think of where silver is headed, this is suddenly going to become something that's possible in the future. Some of the more skeptical audience will likely say, hey, Titty, the math is not mathing. You're being wildly optimistic. But there's a couple things that are happening here. Right now, current electronic vehicles, the entire vehicle, from my understanding, it has zero point 0.8 troy ounces to 1.6 troy ounces per vehicle. In the battery, it's ranging, this depends on the car size, from 0.32 troy ounces to 0.96 troy ounces. And we know that better technology is being commanded by the market. And why do we know this? Because the government has been pulling away the subsidies because it's not economical right now. And I think the combination of moving into a subscription based car economy where you have these better batteries, solid state batteries, you don't have everyone with a charging station at their home. You don't have charging stations all over the place. We have a future where we can then have the same type of economics of going to where the gas stations are and replace them with the solid state battery stations where the specs they're saying you can get a full charge 9 minutes. A full charge. I mean, that's not much longer than you going for a stop and getting gas at the gas station. So that movement to the subscription based economy, let's get really pessimistic about it. Let's say, okay, we ultimately get to that electronic economy, but somehow some genius inventor says we could do it with less amount. To dwarf it down to the amount that the Hunts did, 100 million silver ounces, the math would require then 1.1 ounces of silver for electronic vehicle if we went into full-scale production globally electronically. That would be the most pessimistic view on it. So even at the most pessimistic view of producing electronic cars, it's already at the size of the Hunt brothers. And now you have investment demand that's trying to protect their wealth from inflation. And this is the perfect storm. And here illustrated for you is the breakout to new all-time highs, reaching the high of around $50 an ounce that we touched in 2011 and also in 1980. And it's basically a collision of industrial demand accelerating. And now here in 2025, investment demand has re-entered the market, and mining supplies, they're structurally constrained because it takes years to bring a new mine to start mining silver on board. With this breakout to new all-time highs and this vertical ascent, you have a lot of folks calling top callers, calling blow off top. But if we look at a good representative of retail demand, the SLV ETF, I've highlighted several times on this channel how the volume structure in 2025 is very vastly different than what it was in late April of 2011. In April of 2011, you had 18 trading days with volume on the SLV of over 100 million shares. So far in 2025, in this latest ascent, going into October, November, and December, you only had one trading day above 100 million shares. And in April 2011, right around the peak, you had a trading day with 295 million shares. So the volume structure is completely different, and in particular from the retail side. I'm not seeing signs of retail participation. Libertad aficionados, I did not forget about you. Here is a sneak peek of what we're going to talk about on the next video in greater detail. I have mentioned in a prior video that Mexicans, over the years, due to currency crisis, economic collapses, they've learned, it's ingrained in their culture to save in silver, so they're not wiped out of their savings. And so here's that sneak peek, the 1987 Libertad. It's actually far rarer than its mintage suggests. On paper, on Banco de Mexico's CM27 report, it publishes a mintage of 500,000 coins. So on paper, this looks, it's not rare. It's 500,000. It ranks around number 15 in terms of scarcity for the 1 ounce MS series. But most people, they stop their analysis at the mintage. They don't go further. But what happened in 1987? There was a currency devaluation. That's right. Almost 50% currency devaluation. And they actually had a drop of that 50%. 12% of the drop happened in one day, because one of the other ways foreigners protect themselves from currency collapses, historically at least, they would convert to dollars. That was another way. Other countries, Not like Mexico, they convert to dollars more than they do convert to silver. But Mexicans also convert to dollars. And so Banco de Mexico basically said they stopped making US dollars available down there. And when they announced that same day, the currency dropped, the Mexican peso against the US dollar dropped another 12%. And then not only that, that same year, if you pull up the data on spot silver, at least in US dollar terms, it appreciated 50% in 1987. That is another perfect storm. Why there's very likely not 500,000 of these out there. If you want to make the most aggressive estimate, maybe there's only 125,000 of those out there. But more on that, stay tuned for the next video.